Good afternoon, everyone. Cautious optimism in the Fife property market. Let's roll the video. Apologies. Afternoon, Perry. How are you?
I'm good. I'm good. Excited to be talking about a topic that's on everybody's thoughts at the moment, I guess.
Yes, it is. And I think the key words here are cautious optimism.
That's a positive headline.
Yes, it is for a change. And we're going to talk about the negative headlines and the negative, obviously, feedback in the media and things and that we always have to look and read. And I think that people take quite literally sometimes. And I think it's not always the case. The UK and Fife property market navigates through the ongoing economic turmoil. Many Fife homeowners, I think, and landlords as well, I see that quite a lot, obviously, with dealing with lettings, may feel really uncertain about how the future is. And that's what we're going to cover today and have that cautious optimism that we've just obviously spoke about. However, the up-to-date data shows that in 2023, property crash predictions by the many newspapers and the usual clickbait, obviously doom mongers, if you want to call them, and the lead up to like the end of last year and Christmas, social media and things were really pushing that and driving that narrative. And I think that it may not all be as bad as initially thought. There are reasons to be cautiously optimistic, I think, really. Rightmove, the Rightmove websites obviously state that the average asking price of a home for sale in the UK rose by just £14 in February. So, I mean, what does that mean? I mean, in terms of the property market, should people be concerned, Perry?
Oh, to be honest, I think you need to educate yourself with the right information in regards to what does it mean for you. And it says, whilst £14 in February might sound alarming and cause for concern, as we say, I think asking prices remaining flat rather than falling could actually be seen as a really positive sign. And
Yes.
certainly that's what we're seeing. And that's good for the year ahead, potentially. Remember that they're only what people are asking. So it's not necessarily what people are achieving. And I think that's the difference, you know, the asking price average versus what actually they are achieving.
Yes.
Two different things, as we know. So what exactly is happening in the Fife property market? But it starts with realistic pricing. I think that's a real key factor for us.
Yeah.
And certainly I do see that when I'm out there. You know, you go out to see a client and you'll have an idea of what you think the valuation of the property is going to be. And actually they'll say, oh, well, hang on, I've had someone else out and, oh, you're way off beam, as in not high enough. And I think it's about being realistic and delivering to your client exactly what is required to get them their dream sale. And, you know, we're true to our valuations and to our home reports. And I think that that's a real positive step. And I think that's what's needed. A key thing being really that your estate agent, your agent that you've got coming out, whichever firm that's from, I would challenge them to demonstrate where the number comes from, because I think that gives you confidence as well in actually what does it mean for you and where is it coming from. So I think that's a big thing. But yeah, so having a realistic pricing strategy, I think, is paramount. The time it's taken to sell a property as well is taking a little bit longer. So, you know, the sale agreed upon has increased nationally from 21 days in the summer of 2022 to 50 days in Q1 of 2023.
Yeah.
And that's a big difference. And we've seen that as well. You know, where things have maybe taken 2 or 3 weeks, we're seeing it's now going a bit longer and it's taken maybe 4, 5, 6. So it's about realistically managing expectations along the way as well.
Yeah,
additionally, sorry, where do you go?
No, I just think it's interesting how you said there, obviously, things are remaining flat rather than falling. And the big question is, oh, people say to me, is the market crashing? Is things going down? And I'm like, things have leveled out. But, I mean, there's no any concern about things really dramatically falling. And you're right, challenge your agent to demonstrate where they get their valuations for and where they're getting their price point. There was one I was at today, actually, and we had done comparables and my initial thoughts on the property were at a certain price point, and the home report was done today. And although the comparables in terms of the sales in the area between me and the surveyor doing the home report, we thought maybe, although the comparables showed that we knew the market in the area and thought maybe it's just slightly a little bit lower. I mean, it wasn't a lot, but because of the buyers, the sellers' situation, to really get buyers through the door, we price aligned it appropriately, and the seller totally agreed that we're going to get buyers through the door at that price, and we'll probably achieve that bit where we expect it to be in terms of the comparables. But I think to understand the market is really important, and you'll only get an agent who's experienced in that area and has feet on the ground and knows the, do you know what I mean, what the market's like.
Or her feet.
Or her feet, sorry, apologies. On his or her feet, or on their feet. Yes, of course, but yeah, so it all comes down to experience, and yeah, definitely.
It's true, and I think that's where you really need to challenge that. As I say, I had exactly this conversation with a client this morning. We really want to come with yourselves, but we had another agent out, and this is what they've said. And I said, but does that agent know that area? And they didn't really know that area.
Yeah.
So they've taken the right decision. They've come with ourselves, and I think it is just understanding that. So being flat actually is a good thing, because the home reports have caught up as well. So it is a positive. So I think that's good. So additionally, as well as challenging all of that, and the 21 days changing to 50 days, and that could potentially be a concern, but it's not a concern. It's just that's how long things are taking. Despite the turbulent economic conditions, buyer demand is still rising. Rightmove also reported in the national press that the number of people contacting estate agents has increased by 11% in the last 2 weeks compared to the same period in 2019. And I have to say, we've definitely seen a change over the last few weeks, and I think that is down to our constant contact that we have with our clients. Of course it is, but I think it's just a natural thing because it's that time of year. We're coming into spring. A lot of people have gone through the winter months, so you do tend to see a bit of a seasonal uplift at this point anyway. So I think that's helping.
There's certain times of year, you see that. So.
Yeah, definitely. A number of sales agreed upon has also rebounded, so that's a positive situation as well. I mean, nationally, from the 1st of January to the 19th of February in 2023, 134,886 properties have been sold subject to contract in the UK.
Yeah.
Not a good figure when it's compared to the same time a year ago, when sales agreed were in 2022, 173,607. But that was when the pandemic, that was again the headline of the doom and gloom that was anticipated that actually didn't happen.
Yeah, I know
that's an interesting one.
So let's go through the years. I mean, as if by magic, I do have a graph here that kind of depicts obviously through the years. So you started the last year figures 2022. You were saying like 173,607, and then if we work back to 2021. Was
193,607 was 2021, and then you go to 2020 when it's just short of 152, and then 2019 144 it's just short of, 2018 139 nearly, 2017 134 and a half.
So the last couple of years have been extraordinary for the UK property market, and should be taken with a pinch of salt in some respects. We must compare obviously 2023 with more normal years like maybe 2017, 18 and 19 and even 20, and this tells obviously a different story, which we've just demonstrated there. So I mean, looking a bit closer to home obviously as Fife, because those figures were the UK kind of as a whole, and Fife the first 7 weeks up to 19th of February 2022, obviously we said there over 709 properties were sold subject to contract. Now obviously that's subject to, that's actually the exchange and things going on. So this year, for the exact 1st of January to the 19th of February timeline, 756 properties have sold, which is similar to last year, and slightly better to 2017, 2018 and 2019. So I mean, if you look at it that way, and like you say, if you've got the right information and the right statistics to base your obviously your theory of the market, well, that isn't a theory really if it's based on the facts, then obviously you can see that it's actually not all that bad.
mean, it's a stable market at the end of the day. The market has performed. It has caught up with itself. I mean, if you think back to, early 21, when the pandemic really kind of took hold of everything, and there was this huge outcry about what the property market was going to do, and it was doom and gloom, and it was all going to collapse around us, and nobody was going to be in positive equity, and there was all these really scary stories. And actually what happened was the complete opposite. And it then got to the situation where no one could predict what was going to happen, because it just took off like a metamorphosis, didn't it? So there was a little bit of it, well, gosh, what's going to happen next? And I think then when that happened, the doom mongers came out again and said, oh, well, it'll crash now and interest rates are starting to go up. And when you think about all of those things, there is kind of almost an anticipation that it will happen. But actually, it is stabilised. We've just demonstrated that the numbers are the same for 17, 18, 19. So take out that little hot bubble that was the pandemic, and actually, we're in a great position.
Yeah. Yeah, definitely. And then I touched on there, obviously, I mean, it's all terrific selling houses and things, but obviously it's subject to obviously conclusion of missives and things. And until that, until you're at that point, then you've only sold subject to your conclusion of missives. So I mean, it could all fall through when it's not legally binding until that point. But as agents, we like to obviously delve deeper into the stats and things to look and consider the net property sales, which obviously, like you said there, obviously in terms of just looking at as the actual property sold rather than the properties on the market.
I think that's the key thing. Yeah. That's the key, and actually that's where I was going with this. until keys are handed over, it's true, anything can go wrong. But I think again, that's a part of having a strong agent on board as well, who understands the journey that you're on and what stage you're at on your journey, and working together to get you across that line. And definitely your agent should be working strongly with you and in your favour of making that happen. It is rare that it won't happen, and sometimes you can hit a bit of a brick wall, but actually there can be ways to get around that and still make the dream come true. So it's just a case of being dogged, really, and make sure that you get there.
Yeah, I think that obviously it is to concentrate on net sales rather than, and that's the gross number of properties actually sold, as opposed to and then obviously taking away the ones that maybe haven't exchanged and fallen through, and look at that figure and base your theory, like, obviously on that number rather
I would agree. And that's what it's about. I mean, we often say it doesn't matter how many properties you've kind of got under, subject to sale or whatever it is, but it's actually transactions. We constantly talk about how transactions are what's important in the property market, and that really doesn't matter how much your properties are selling for. If they don't transact, actually it doesn't mean anything. So the statistics are definitely how many transactions, and that gives you a good insight to the health of the market, doesn't it? I mean, in the 3 months leading up to the mini budget in September 2022, there was an average of 17,801 properties per sale per week. That dropped by 34.7% 2 months after the autumn mini budget, to an average of 11,624 net property sales per week. So there was a big difference there. But we've seen a difference. I mean, in the last 5 weeks, that's rebounded back up to 17,050 net property sales. So that's actual transactions completed. So it's back on par again with where we were back in September. So the little blip in the budget seems to have levelled out again.
It levelled it back out again,
I mean, I did the Rightmove kind of index update last week, and what we saw in the UK, there was definitely a bit of a kind of roller coaster ride where the numbers were dipping. But actually in Fife, what we've seen is when we looked at December, November, all the way back to May, it was steady. It had stayed the same. So what we're seeing now actually is a similar picture. So that's a really positive place to be.
Yeah, and I mean, like you say, obviously it's rebounded in the last 5 weeks, and if you consider the average in the same 5 weeks, like we just looked at it, like in 2017, 2018, 2019, it was just over 18,000 property sales per week. So we're close to what many would consider a normal market again. Do you know what I mean? So it has really done a bit of a circle and we've levelled back out. So there isn't any great cause for concern.
Yeah, I mean, there's elements to that. I mean, the improving market conditions have also been supported, of course, by a reduction in average mortgage rates. There are still some really good rates out there. Home buyers taking out 5-year fixed rate deals play a big part in that and making it a bit of a secure market. 5-year fixed rate deals with 15% deposits can expect a rate of about 4.39%. So, I mean, that's a really good place to be. I know that some people are saying, well, actually, that's rubbish because I've got 2%. But when you compare that to pre-pandemic, when it was like 5, 6, 7, it's still a really good opportunity for people to get on the property market without having to put down the 30, 40, 50% deposits.
Yeah.
So that's a really strong thing for them. And that's according to HSBC. There are other lenders out there, but that's the example that we've picked for today.
It's a bit of a snapshot of the market, and I've seen those figures reflected in discussions I've had and speaking to people.
But I mean, that 4.39%, when we look at that, I mean, that's down from an average of 6.1 in early October.
Yeah.
So, that's like two-thirds, less. So, that's a really strong position for people to be in. So the reduction in mortgage rates will have or may have contributed to the recent increase in buyer demand. But I think it's also accumulated with where we are in regards to the seasonality piece as well.
Yeah, as you said before, and I totally agree with that. But I mean, these are all really positive signs in the market, and I've led some experts to now suggest, obviously, a softer landing for the property market than initially expected. And that could be on the horizon, obviously, as opposed to the crash and a recession and everything that was flying about in recent months, and in fact, like the majority of the last year as well. I think that the combination of sellers being more realistic on price and an improving picture of the number of agreed sales suggests a more positive outlook for the property market, and I definitely think that is what we're seeing here. What would you advise Fife homeowners coming to the market?
I mean, for me, as I said earlier on, we're coming to the market, it's upcoming in the spring. It's a great time to be selling a property. So your agent's expertise to get the right price for you first time round and to find the right buyer more quickly is paramount to you, because chances are you'll now have seen something. If you do wish to chance a higher asking price, only do so for no more than 2 weeks. If you haven't sold by then, take your agent's advice and realign that. So that's one of the things that we're finding. I think it goes back to the earlier comment that I made about making sure when you've got your agent out, that your agent really does demonstrate to you how they understand the value of your property and where did that come from. And then you list it at a reasonable price. But if it's not shifting, which is what we would say would happen if a property isn't, the first 2 weeks of a property listing tends to be where the highest generation is, because it's new and everybody's seeing that it's new. But actually, after that, you've still got your correct buyer who's maybe just not in the market yet. We often speak about this, Richard, don't we? That 20 people a day in Fife decide whether to buy or sell a house. So there's no need to panic after 2 weeks. But if you're going for a high price strategy, you do need to make sure that you have something in as a kind of fallback, and the reasons for that, because the market will want to see what that is and what does that mean for them and the house.
Yeah, I think if you as a seller are prepared to test the market and wait, then you could be at that slightly higher price point, which is still probably achievable in the area. But like the client I had today, they are really keen to move on. They're not looking for overly above what the expected price is. So and between us and the surveyor, we realigned it just ever so slightly, where I think it'll sit better in the current market and what the demand's like in that area. And that's, like you say, that's the conversation you should be having with your agent, and they should be advising you, because of your circumstances, we should be maybe slightly realign it, instead of maybe 2-3 weeks down the line into actually, once you're on the market, then having to think, right, okay, we're going to have to realign this now because it's going to be a longer time scale.
Definitely, and that's what we see, and it's about having that honest discussion, isn't it? And you only move because of your circumstances. So something is driving this, something is making this have to happen for you. So your agent really needs to understand your journey. Where are the pain points in your journey and how can they fix it for you? And I think that's really paramount that you get that understanding. So it is about getting good advice. But I mean, having said that, 194 Fife homeowners have realigned their asking prices since the 1st of January 2023.
And I've seen that, because you'll see that yourself, Eric, because we both keep an eye on the market and what's coming on and what's going off and all the rest of it. And I've noticed a lot of price realignments over the last, obviously, few months in the start of this year.
Mm-hmm.
So that's no surprise. That did you say 194?
Yeah, 194
Fife
homeowners since the start of the year. I mean, while it's true that some first-time buyers may still be priced out of their original plans and may need to look for maybe a lesser expensive property, maybe they have to get a bigger deposit because the mortgage offerings have changed. Higher monthly mortgage payments again making a difference. So then suddenly what they could afford 6 months ago maybe is not what their budget can afford now. So there's still cause for optimism for those people. The fact that we've just demonstrated actually with a lesser deposit, you're still getting tied in low rate deals at 4.3
a good rate. Yeah, definitely.
Yeah, absolutely. So there's
And I
still
think,
considerable demand for buying property in Fife. I think we're definitely seeing that.
Yeah, there definitely is, and then, but I think obviously renting. Obviously, I do a lot. Obviously, predominantly do the lettings and things as well, and renting is becoming increasingly unattractive to some people in some cases because of the market being in the way it is. For many people, rents have obviously increased to the point where they think, well, I should be maybe, I maybe should be buying. Obviously, like instead of obviously the rents coming up in obviously double digit percentages and things as well. But I mean that swings in.
Are you seeing quite a bit of that then, Richard? Have you seen a kind of a particular trend in that? Sorry, I just had to reach over and turn my heating off there. I'm actually
That's okay.
I forgot I had my heater on and I'm absolutely cooking.
Yeah, I mean, I think people have got some people have got the outlook that obviously because again, it's the media and things. There's like, oh, like rental prices are skyrocketing and things like that. I mean, but in general terms, it's like the sales market. Unless you really know your facts and know the market and actually what the previous rental prices were, and people might think, well, that's really high now, but it's like, well, it's not changed drastically from what it was X, Y, and Z years. Do you know what I mean? If you've got your finger on the pulse with lettings and things, you'll realise that. But people take that approach, think, but I'd be as well purchasing a property because I could do it with X amount and whatever. So yeah, it does swing in roundabouts.
I mean, if I go back to talking about there, I mean, we're definitely seeing still that there is buyer demand.
Yes, of course.
I think it's important as well that purchasing a property always involves a trade-off between what maybe you necessarily desire versus what's affordable, regardless of the market conditions.
Yeah,
it's this kind of want and need thing that we always talk about, isn't it?
Yeah, people's expectation, and again, as an agent, that's what you need to help people do, is to help manage their expectation, and maybe what they want to achieve or expect to achieve maybe isn't attainable, but and there's depending on their circumstances and their financial setup and things as well.
I mean, while a 4-bed detached house may be out of reach, a larger and older 3-bed semi, for instance, might be a more realistic option for some people, and they probably have same square footage as well. I mean, that's why the semi-detached was kind of invented, wasn't it, at the end of the day, so that people could afford and be in nice properties. I mean, that's kind of what we're seeing in regards to the properties for sale. But in regards to Fife landlords looking to invest in buy-to-let homes, is this a good time? What's your view on that, Richard?
I do. I mean, do you know, landlords and investors at the moment, there has been so much activity, and that it's such a good time to be buying. And people might think that's strange because house prices have been so high and whatever. But there's been such an influx of investors, and there has obviously been investors who have left the market, but there's also been a lot of new investors coming through, especially in the Fife market. Fife landlords looking to invest in buy-to-let homes. I think now, maybe, in fact, I know now is a good time to do that. Obviously, with rising rents, you're attaining good returns and things. And I think of the 249 properties let in Fife since the 1st of January, the average rent achieved is around about £780 or £790. People might think that's really high, but you have to remember in Fife we take into consideration it as a whole. So you've got St Andrews, and you've got obviously higher value areas and the lower value areas. So that's obviously an average of that. But this is a significant drop in the number of properties let in the same first 7 weeks of the years, and we'll keep comparing obviously 2017, 2018 and 2019. But it's a massive increase in rents in comparison to those years. But I mean, to me, I think it's a really good time for investors. There's a lot of good opportunities out there. I think there's a lot of good opportunities to purchase property in certain areas. You need that. I think that's the important thing. You will see a lot of properties maybe at higher price points, and you think, well, that you're not going to get a good return on that because you're not looking in the right area. You're not looking at the right property. You need to have a plan about what you're looking for, where you're looking for it, and how you're going to maybe increase the capital appreciation over time, or immediately increase the value by doing a renovation. And so you need to look at areas that may be undervalued but underappreciated in terms of their price point. Areas like Glenoffice, I use it as an example all the time. You'll know yourself, Perry, that price points in Glenoffice could be in certain areas of Glenoffice. Do you know, within Glenoffice itself, it then has areas where are really good rental areas. They're brilliant for obviously families and schools and things. You get a good rental return, but you can purchase the property at a really attractive price, and so that gives you a really good return and long-term cash flow, as well as being able to add a bit of value with capital appreciation over time.
I guess as well, when we talk about investments and is it a good time, are you seeing many new landlords coming to the forefront, and do they have a longevity plan? Because I mean, we often talk about the fact that this is not a transactional thing, it's not a short-term win, that it's about building a back portfolio, isn't it?
Yeah, I think the majority of people coming forward to me and asking for advice and who I'm assisting at the moment are investors who are looking to build a portfolio. Now, whether that's maybe just 2 or 3 or maybe upwards of 6 and more. I've even got some that are buying 6 at a time now, because obviously they're getting that reduced, obviously on the ADS and things. And there is a mixture. I mean, the majority of landlords are made up of maybe they've got a portfolio of maybe 1 or 2. That is but more and more I see investors coming to build portfolios of a substantial amount, and they are in it for the longer game. They are in it for the long-term cash flow as opposed to quick gains from short-term. You're not. Do you know what I mean? Really, you should consider your goals and your game plan when you're doing property investment. And ideally, it's not a short-term thing. You're not going to get a lot of high gains in a short term. It's over a longer period.
Okay, perfect.
But I think there's misconceptions about it's not a good time to invest because of maybe they think the sale market, the sales side of things, are a bit turbulent, which we've just demonstrated it isn't really. It's quite stable, and it's just kind of leveled back out again to where it's recognised as a healthy housing market. And there's really good deals out there to be had for investors in terms of adding to the investment portfolio, definitely.
I mean, I think that's what we see, isn't it? I mean, newspapers will always be full of news about house price drops in the coming months. All the index reports on house sales where the sale agreed was offered 9 to 11 months ago and completed, i.e. money's keys handed over, like we spoke about earlier on, 3 or 4 months ago, you know, we're still seeing that increase. So it's not a massive downturn. At this particular time, lag means that house price data is nearly a year old before it's published. So that doesn't help actually, because then you're actually not dealing in current fact. And when you think about if the information's not been published for a year, we're now dealing with where we were when we were in the midst of peak pandemic, you know, start of 2022, when the house pricing and the activities were certainly much higher in regards to demand, certainly not what was available, but the demand was causing that increase as well, wasn't it?
Yeah, definitely. And obviously you say about the newspapers and that'll all be full of, I mean, I think social media is such a big driver of this, this, like you say, the doom mongers and things, and TikTok's the worst for it. Do you know what I mean? As soon as something's on TikTok, and obviously I have TikTok for work, and the feedback you get sometimes is just like, okay, I think it's just because it's such a broad platform with so many different, do you know what I mean, feeds into it. I mean, as opposed to just the normal social media platforms and things. But
I think that's a good thing. I think having
it is a good thing.
I mean, that's what we base our business on, and I think it's good to have it. But you have to not make snap judgments, and you have to deal with the facts rather than what you're seeing potentially as headlines, which is
and I think, like you say, obviously the newspapers aren't just a paper anymore. They're obviously publications, and they're on all these platforms, and they're in everybody's hand first thing in the morning and last thing at night. And if they're publishing this information, which is driving the narrative of how the market is when it really isn't,
Exactly.
Yeah, that's what
And
creates
I
that.
think when we talk about that as well, and about the publication of some of that data that potentially is out there on the keys handed over situation being over a year old. I mean, if you decide to buy a house on that information, you're using old property data, aren't you?
Yeah.
So that that can be challenging for yourself to really understand where it is. I mean, in late 21, early 22, there were 30 plus viewings per property. And people paid way over the asking price. And that's what I was saying about how if you're looking at that kind of data, where we are today is not what it was like back then. No one expected what happened back then.
Yeah, we went through that. It was difficult.
Yeah, definitely. Yeah. So, I mean, they were paying way over the asking prices to secure a property because there was minimal property on. I mean, at that point, there was about 400 properties to maybe 420, 450 max each week. Now we're at about 865, I think it was this morning when I looked. But before the pandemic, it was about 1,1300. Yeah. So we're kind of in that middle bracket now, which is why I think it's stabilizing itself a little bit. So I think that's normality for Fife.
I would agree. Yeah, I would totally agree. And I think that although we've maybe not at the point where we were struggling to fit in the 30 plus viewers for every property, we've still got a good amount of demand for property and people buying property.
I think for someone who's looking at purchasing as well, though, I think the basis of the fact that that's where we are and prices are now more normal, and they're at more, I don't know, slightly more realistic, and we spoke about that earlier on, didn't we?
Yeah.
So yeah, the house price indexes will show a reduction in house price sales and prices. The newspapers will say house prices are crashing because there's a reduction, and any reductions bad, even though it was in a huge positive. So actually, the reduction's normal. But it explains the way all of the above will work for you in regards to everything that we've said, really, won't it? And while it's not a newspaper clickbait title, it's the truth. And that's what we try to do, is provide facts for people so that they can make good judgments. And it's more of a return to more normal house pricing practices is what we're seeing. And that's certainly what we're seeing in regards to the transactions that we're dealing with.
Yeah, I think it's always good to review the market as it is now and in recent times, as opposed to let's compare it to, like you say, the old stats and the old figures, because that's not how the things are performing at the moment. And any good agent, and obviously that will be able to demonstrate and be able to explain that to you. So I think, but I mean, we all need to prepare for the clickbait newspaper headlines and things like you spoke about. I mean, like the house price crashes and things, it will happen. And I think you'll never escape that. But if you could train yourself not to take that in and listen to a professional who obviously is familiar with how the market is in an area at that time and moment, and can provide you with the evidence to back that up, then that's really who you should be taking your advice from.
Definitely. I mean, we always know it. Bad news sells papers. Bad news gets titles. Bad news gets viewers. It's just the way of it. There is an attraction to it. But I think there's an element as well where perhaps you need to prepare for the doom mongers to quote that bad news of the earnings to houses prices ratio, and how's that going to impact you? And they're at the highest levels ever. The reality is that they're not. I mean, the average property in the Fife area is 184,000. The average salary is 31,000. That's the same as the average salary from England.
Yeah.
So actually, us living here, we're in a really strong position. And I think that's what we need to kind of bear in mind, that we can't compare what we see on Sky News platforms. There are other platforms out there as being factual for us and what's going on in our worlds.
And what about like first-time buyers and obviously mortgage payments and things? What are they kind of facing at the moment?
So, I mean, earnings to house price ratios are a poor measurement of health in the UK as a whole in regards to the property market. In our view, first-time buyer mortgage payments as a percentage of their take-home pay is a better way to judge that. It's actual pound notes out of actual pay packets that make the difference, doesn't it? And that determines what it is you can pay. I mean, the nationwide measure first-time buyer mortgage payments as a percentage of their take-home pay has grown for first-time buyers from 30.4% in Q4 2021 to 39.4% in Q4 2022. That's a huge rise.
That's a bit of a jump, when you look at it like that,
So what that's basically doing though is showing that people have got more affordability, which is fantastic. So mortgage interest rates have dropped since then. Of course they have. So the percentage will fall. Also, it will give some context, and let us not forget that the percentage in 8 to 9 was 48.4. So, you know, there's a huge difference in comparables. And I know we've said about not going back and looking at historical, but it is important, I think, to realise actually, you know, salaries are going up, lifestyle is improving, and property is affordable in the Fife area.
It's when you base it on the salaries and obviously and look at this time in comparison to the year previous things, yeah, definitely, and like you set that out quite clearly there, I think, and that was quite interesting to hear it like that, and I think a lot of people will agree with me, and I think like ultimately if Fife homeowners or Fife landlords should decide maybe based on their unique circumstances, and it is about everybody's individual, rather than being swayed by the newspapers and the headlines and, you know, in general market trends. Anyone that's uncertain about that or the property market's future should really contact yourself, Perry, or myself. Drop it in the comments, message us direct. If you are uncertain about anything, if you're a landlord and you're uncertain, if you're obviously going to be a home buyer or if you're selling and just not quite sure, it's really good to stick to the facts and look at this time slot in the year compared to maybe previous years and look at the actual stats. There's a lot of agents out there that probably won't have that available to you readily to say, right, okay, well, at this time last year, this is so, and give that example of how the performance of the market is in comparison.
I think that's important for people. I mean, for me to wrap up on this, really, my thoughts are that, and I say it quite frequently actually, is equip yourself with the right information, apply that information to your personal circumstances, because actually what's going on with the other 99.9% of the population doesn't really matter to you. It's, you know, what matters to you and how can you make what you need to happen.
Yeah.
Get good advice. You know, we're not financial advisors in any way, so you need to get good advice in that score, and get a trusted partnership with people that can guide and work with you and give you some real fact. Sometimes that fact will be go for it. Other times it might be actually now's not the time, but, you know, understand it for yourself, not necessarily what the world is depicting, would be my final say on that.
Yeah, I think that's you made a really good point there as well, and I think it is important that if you go to an agent and your circumstances maybe think, right, maybe this isn't the right time for you to sell due to X, Y, and Z factors, I don't know, then they should advise you of that, not just push you to the market to make another sale. Do you know what I mean? And that's really important, and that's an agent who you can trust and things. But yeah, I mean, my final thoughts is that we've covered a lot of really interesting stats and figures today, and I think it's good to see the comparison between the years previous and where we are now. And I think it's really important to keep in mind that we are quite on a level field at the moment with the sales market, and likewise with the lettings, and obviously from a landlord and investment point of view, it is a really good time, despite maybe house prices maybe putting people off thinking I'm not going to get a good return, because there is good deals and good returns to be made out there for landlords. So like I said, either way, if it's sales or lettings, message us direct. We'll be happy to give you any advice. We're not financial advisors, but we do know really good financial and mortgage advisors who could guide you through the process of maybe obtaining good mortgage products or some financial advice about your current situation. And if you're an investor and you want to know how much spending power you will actually have in the current market and things, then we have got the right people to refer that on to. And that's probably the key for me, is knowing the right people or knowing the right person to refer you on to the right people.
Get the facts.
Yeah, definitely. But yeah, so that was good. We've got, I mean, just a couple of people joining in here. Thanks for watching. Good afternoon, Andrea. We held quite a few viewers there that were watching. So yeah, if it's a rerun, guys, still write in the comments. We'll pick it up. You can message us direct on our social media pages if you've got any questions on anything we covered today. There was quite a lot of stats and figures there, but I think they demonstrate the current situation with the sales market. And thanks very much for your input, Perry, and running through that with us.
Thank you.
Okay.
Take care. It's my pleasure.
Yeah, have a good